Hey everybody, and welcome to the channel, or welcome back if you've been with me for a while. If you are new and you're looking for a way to become more profitable and more consistent in your trading, you found the right channel. This video may not do it for you, but this channel will. We've got over 300 plus videos for you guys to learn how to trade the strategy that we're about to discuss and do it profitably and consistently. This channel will teach you how to get into trades, get out of trades, manage your trades, how to trade without any real indicators outside of these candlestick numbers and the lines that you put in to get in and out. That is what we teach here. That is what you're going to learn on this channel. So welcome if you are brand new. If you are new, make sure you go down below, click the subscribe button, hit that bell. That's the important part. That will send you the notifications for when I send out videos just like this one every single day for free. This is our Lotto Friday watch list for September 23rd. We're going to go through the plays. We're going to show you where you can enter and where you can exit. So buckle up and get ready to go. Before we get started on that, guys, I want to go through a couple things. If you're on Twitter, you can find me there as well at Mr. Clark Griswold. You can find me in the Discord. Go down below, click on the link, get in on that Discord. And then everything I have to offer you guys, whether it's free or fee-based, you can find in that Discord. I have Griswold Gold memberships, which give you access to the live trading bots, the Griswold Strat Indicator, which we have on the screen here, along with a couple other indicators that are included with it. It's an all-in-one stop shop for that stuff. There's a bunch of other things, one-on-ones that are included with that Griswold Gold membership. If you're looking for just the trading bots or just the indicator, those can be purchased separately as well. So get in on that Discord, join up, and let's learn and earn together. I also want to talk about the screen that you're looking at. This is TradingView. That's how I chart all of my plays, all of my setups. If you don't have a setup like this or something to use like this, or if you've never used TradingView before, there's a link in the description below. That link will get you a free 30-day trial to TradingView, to their subscription-based services. And then if you decide to use those subscription-based services, you get up to $30 off of that subscription, depending on which one you choose. So go click on that link and get started on that. The last thing I want to talk to you guys about are the ads. And I know the ads suck and nobody likes watching ads. Okay? They're brutal. Nobody ever clicks on them. But those ads pay for this stuff to be free. They pay for your guys' education on this stuff to keep it free, to keep these videos free. So what I ask in advance, and I thank you in advance, is to let those videos roll through. Go get a drink, go get a snack, come back, and we can go through the watch list. And keep your money in your pockets, guys. This stuff is free. These videos are free. Okay? So watch the videos. Watch the ads. You don't even have to watch the ads. Let the ads roll through. And like I said, I thank you in advance. It pays me for my time. I love doing these videos for you guys, and I want to keep doing them because I really do love it. These ones, the Spy series, we're going to look at starting a podcast right away, I think. And then the new Questions with Clark that I started every Sunday. So let's get started on this watch list. The first setup we're going to go through, and let me preface by saying I don't think there's a lot of great setups for Lotto Friday. You might be better off trading intraday than off of the market open. I'm not sure. There's so much bearish sentiment. We could have a green day tomorrow based on how red we've been over the past. And again, that's just probability. And before I go into this, I keep on rambling on here. Every trade, every strategy is based off a probability of what we're looking at. And if there's probability, there's risk. Every trade, every strategy has risk. Doesn't matter. If someone tells you it's zero risk, they're lying, because they don't know what that next candle is going to do. There's a high probability that that candle is going to do what it's supposed to do, but there's no surefire way of knowing that that's actually what it is going to do. So there's risk involved, and it's how you guys manage your risk that will determine if you are a great trader, a good trader, or terrible. It all comes down to managing your risk, managing your trades, managing your stop losses. So let's get into this stuff. We'll start with Apple, AAPL. Apple has a 2 down that finished green. We gapped down this morning. So all this means is we broke below the previous candle only. It's the 2 candle. It's a directional candle. And we finished green. Okay, so when we're 2 down and we finish green instead of red, that gives me a high probability that this trade is going to trend to the upside. Now, if we do, we'll have the hourly, we'll have the daily, and we have the weekly. When I day trade, I want to see for sure this hourly and this daily green, and anything else is a bonus, just meaning that it gives me higher probability that that trade is going to work out in my favor. So we can look for calls on Apple at 154.44, and our first target is way up here at 158. That's magnitude, that's profit target, that's where the bears have their stop losses. That's a lot of meat on the bone, so that is a good magnitude. If I'm taking this trade and I'm looking at calls, I'm taking the closest expiry. That's how I do it. You can get further out. I like taking closest expiry. And if I'm looking for a strike price at 154.44 as the trigger, my strike is going to be 155 or 156. And then I'm getting in that play there. You don't want to take your strike too far out. I know it reduces the premium, but the further out it is, the harder it is for you guys to gain on that trade. If you pick 164 because it's dirt cheap, Apple's got a long way to go to get to 64 in a day, and you're probably not going to win on that trade. Okay, so that is the play on Apple. We'll move on to CL. That's Colgate Palmolive. Had a 2 down that finished green, and this is partially why I'm not concerned, but I don't think there's a lot of great setups, because we do have this 2 green on CL, but everything is red. Okay, everything's red. So that's not to say that this can't trend up off of this 2 down that finished green, and we can hit targets at, let me change that to green, at 76.32. That's probability. But the probability based off of time frame continuity is not great. So there's a little bit of conflict there that we have to wrestle with and decide if that's a trade that we want to take. Now, if we trend up, the daily and hourly are green, that's great. That's what I look for. I would just like to see one or more of these green as well to give me just more probability of a successful trade. Docusign is next, DOCU. Docusign has a 2 down that finished green. Same thing that we just looked at on CL. We can look for calls at 54.65, and there is our first target. Adobe, ADBE, I think this is the same thing as well. Time frame outside of the day to the downside. We've got a 2 down green. We'll look for calls at 289.20 and a first target marked here at 297.94. That's really good magnitude as well. CRM, inside bar, 3-1 setup. So this is a rare setup, guys. Doesn't happen very often. It's an outside bar followed by an inside bar. We'll talk about inside bars in a second, but let's go back in time. So as I was mentioning of that Griswold Strat indicator, you can't find it in this indicator tab. You can find it in the Discord or the link down below. It's a one-time $25 fee. So that indicator will give you the time frame continuity, the painted inside bars, the painted outside bars, the IB, the OB tabs. It'll give you this golden highlight over the 3-1 setups. Double inside bars get this blue setup. And it gives you the candlestick numbers and Sara STRAT Sniper's 50% rule. So if we go back and look the last time we had the 3-1 setup, and here it is. And I love going back and looking at these so you can see how history shows us what the probability of it is, and as well, it allows me to show you guys how easy it is to find these setups if we're going back. So, and it lets me allow you to tell you guys that these candlesticks tell a story. This candlestick tells you, if I break through the top of this wick, this candle right here, if this candle breaks through the wick, you can buy me. And if I hit this target right here, you can sell me. It did exactly that, okay? Exactly that. Outside bar, inside bar, trigger, target, done. Okay, that's what we like to see. That's how those setups work. So outside bar, inside bars, guys. I always see these yellow inside bars and think of a spring being loaded or compacted. That's my first thought. And when you let go, when you release that tightness, that friction, that compaction, you expect these things to explode into one direction or the other. So that's what we would expect here, and we can look to take our targets there or there. Now, comment down below if you know what is the higher probability play. I'm going to tell you anyways, regardless, but put it down in the comments. So the high probability play is if we trend down. So we've got a couple things leading us to believe that that is the high probability trade, and that's what could happen. So number one, we've got the time frame continuity. Number two, we've got an inside bar with an inverse hammer or a shooter candle, meaning we have this long wick to the top and this body at the bottom. It looks like an upside down hammer. So an inverse hammer or a shooter candle, like a little putter. Okay, so that's the high probability play. Not saying this can't trend up and make a run, but based on the information we have, the probability is that. Now, I'm not saying we jump in because of that. We need to wait till we trigger. We look, we see, we do. Okay, but we need it to happen before we actually jump in. So that's on CRM. We'll go to GE, General Electric, 2 down, finish green. We'll look for calls at 65.72 and your target is marked out. We've got time frame there. And again, if we hit this, this is Thursday's bar, Wednesday, Tuesday, Monday. If we trigger, then we've got the week on our side as well. So look for GE. IBM, 2 down, finish green. Conflict with the time frame, inverse hammer. We'll see what happens. A little bit of conflict there. Calls at 126.51. Microsoft, same exact play that we just went over with IBM. Okay, we'll look for the trigger to the upside based on the 2 down finishing green, but we've got an inverse hammer or a shooter candle. We've got rough time frame continuity, and we're approaching the bottom of this broadening formation as well. So we'll see what happens on Microsoft. Netflix, 2 down, finish green. We can look for calls on this one at 240.51. And good magnitude to the top at 248.21. I don't recall, I haven't looked at Netflix in a bit, but I think it's higher premiums if we're looking to play that. Pfe Pfizer. Okay, here's the thing with this one. We are an outside bar. I don't usually give these setups, but we are at the bottom of a broadening formation. So if we can look to trend back up off of this, let's zoom out. We'll look for calls at 45 bucks. And if I zoom out on Pfizer, you can see how that broadening formation works. Okay, we've got these highs to lows to highs to lows, back to the highs to the lows to the highs. And we're not tagging this every time, but we've tagged it now. And we can go look at this on the weekly. It'll show us the same thing, just on a larger time frame. Okay, high to low, back up and back down. And you can draw intermediate broadening formations within here. Doesn't matter, but that's what we have. And then even if you go to the monthly and look at that, we've got the same thing, just on a little bit of a different scale, right? So we've got highs to lows to highs to lows, back up, back down. Let's see if we can start trending back up on Pfizer. And that starts with that outside bar setup there that we just went over. Next up, we've got Procter and Gamble, PG. And guys, let me tell you right now, at the end of the video, there's going to be a playlist of learning tools for you, as well as the SPY series that we started, Trading SPY every day on the 30-minute chart. So make sure you're waiting till the end. You can go click on one of those videos to learn even more on how to trade with the strat. So Procter and Gamble, 2 down, finish green. We'll see how this one plays out. We can look for calls at 137.05. First target at 138.20. Make sure you're following me on Twitter. Subscribe down below. Give me a thumbs up if you like the video. Get in on that Discord. And don't forget about your free TradingView subscription for 30 days. I will see you on the next one, guys. Good luck trading Lotto Friday. And have a great weekend. Bye-bye.